Good morning and welcome back to Nasdaq Trade Talks. I'm your host Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from the Singapore FinTech Festival. Joining me for this segment we have KC Lam. He is Vice President, Head of FX, Rates and Derivatives over at the Singapore Exchange. Thank you so much for joining us for this segment live from the FinTech Fest. Let's talk about some US-China trade where that seems to be a huge topic. We saw in US trading today for sure. How is that impacting the FX markets?
Well, if you look at things that's happening this year, trade war, there's a increasing trend of deglobalization, and there is also increases in tension between various countries. We have seen that transmitted into asset prices that have gone, very volatile, right? And especially for FX. On SGX, we actually have the largest volume traded ever record for the whole year in 4 different occasions. And this year we're trading close to 2.6 yards a day in billion dollars a day in trading notional value, and that is actually 180% year-on-year growth from last year. So yes, the result has been positive in the sense that we have seen market moving from one basically pricing, looking for liquidity in one location, and that has actually been shown on our exchange. We have also seen a very dramatic increase in the T+1 volume for SGX. What does T+1 means? It essentially represents the volume that is traded during the European and US hours. So 40% of volume on average daily basis is coming from those parts of the world.
So the trade tensions are good for exchange volume, obviously because more traders are trading, but let's talk about the latest from SGX FX Risk Management, the toolkit that you offer, and that's the Flexi FX Futures. Can you tell us more about that?
Sure. One of the things that has unintended consequences is the regulation after the global financial crisis, and what they have done is that they have put in a lot of friction into the market, a lot of trading friction for the OTC market. We took a hard look at this market and what they really need to solve the problem, how to improve operational efficiency and also maximize the capital use, right? So we came up with a solution that is a hybrid of both OTC and exchange trading. And what that means is that it basically gives the maximum efficiency for traders who want to basically trade in a bilateral OTC manner and yet enjoy the efficiency and the surety of an exchange traded market. And here's where we step in. We came up with a solution called Flex, where both counterparties can trade a contract any date they want, any business day they want, and send it to the exchange for clearing. So it's an OTC bilaterally traded solution that is cleared as a futures. That actually improves the cost of trading, lower the capital usage, and actually it retains the relationship in the OTC world. That's actually very critical.
So how are you utilizing FinTech, all the technology that we see here today, how are you using that within your trading platforms?
Within the DL, we actually have invested in a company called, it's actually a DLT company, and it's Cobalt. It has a DLT technology on it, and actually is scalable to solve one of the biggest issues they have with the OTC world, which is the inefficiency between the back office and middle office. So that actually, with the immutability of the contracts, you are able to scale and actually reduce the cost, bring it down like a multiple of 3 or 4 times. So that actually is very, very useful. It's actually now at the pilot stage, and I believe it's going production soon. So that is actually very key for the OTC world.
All right, KC, thank you so much for joining us today. And be sure to stay tuned throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.